The next trading approach is a swing strategy. This is a obviously the concept of swing trading will differ for all people, but the thing that I will be talking about today is more of a intra-week trading system. You want to be holding trades. Sometimes the trades will play out intraday, but in most cases it will take a couple of days to play out. Sometimes even I hold these trades for a week or two. This comes to holding trades over the weekend, which in legacy markets is something you need to be aware of, because market is obviously closed, but there is certain amount of risk to that. But the kind of a average holding time will be couple of hours, couple of days. So the characteristics of a swing trading. This is the medium trade frequency, medium risk profile. You are not taking as many trades, therefore you can risk a little bit more than you would do in a day trading, but don't go too crazy. It's still kind of a 2% per trade is where you want to be. 1 to 2%, 1.5%, depends on how you kind of feel about it. Risking something like 5 can be a little too much. You are working with a weekly, daily, intra-week and execution time frames. And you are trading a handful of markets, so you are paying attention to correlations and intra-week news events. This is the thing that is complicated about the intra-week trading, because the longer you are holding a trade, the more kind of exposed you are to uncertain events. These come in both new releases, which are planned, and also unplanned events as well. So you need to be aware of that. You need to track the news that are happening. For intraday trading, you don't need to pay too much of attention to the news, but only around the events. I will talk about that in a bit later in a different video, but the longer you are holding the trade, the more exposed you are for these things. The weekly and daily time frame is for marking out the key daily and weekly levels based on price action and composite profile structure. This is the same thing as with a day trading approach. When there is a high time frame bias goal, is to give trades more room and run for long-term swings. For this type of strategy, the weekly levels, the trades can really run from them. So you need to be fine with holding them for a longer period of time. Intra-week time frame, you are going to be marking levels on H4 chart. This is some medium term time frame from daily to the 30 minutes where you will be executing trades. You are once again looking at clusters, QMs, and possible failed swings at the key levels. H4 swing point, per day, week, month highs and lows, composite profile structures, and naked points of control. I also mark out all the market profile anomalies and so on. The execution chart is for this strategy is on a 30-minute chart, and you are trading with H4 flow. This is kind of a important thing, because you basically don't want to be going against the 4-hour sort of a trend. So if you see the 4-hour chart is clearly rejecting some level, you don't want to be trading against it on a 30-minute chart, even if there is some sort of opportunity. From a order flow tools, traders are using relative volume and footprint for confluence. You are not going too in depth in terms of cumulative volume delta, but simple 30-minute footprint will do the trick with a high pickups of relative volume. Trading expectations, traders should be given more room. Trades should be given more room to play out. Once trade is placed, traders should only monitor it for a strong exit signals if drawdowns. This is something I already mentioned, but I give these trades much more room than I would give a intraday trade. Once again, we are going to jump into the Sierra chart. For this case, we are going to be taking a look at Euro, because this is a trade that I actually took. It's not doing too well, but the idea of it is still valid, so let me just run you through it. I'm going to be starting at a weekly time frame. At a weekly time frame, I have the same composite profile as I have on a daily time frame, and I'm just marking out when it comes to weekly just kind of a overall areas. You can see there is a little bit of a weekly cluster which started this move to the downside at the edge of this high volume node. For this case, you can see there is a box, there is not only line, because when it comes to higher time frames execution, I don't mind having it on the chart. It's just a personal preference. This doesn't really matter. So but besides that, you want to be basically mark out all the weekly levels where market gave you the previous reaction, and also there is a composite profile for it. You can see that volume really did edge here at this kind of a weekly swing high, so this is probably even a better level than the cluster itself, because there was this no immediate sell-off from it. Market just spent a little bit of time, it made this weekly bearish engulfing, and then the next week not much happened. So marking out this high in correlation with the volume profile would be a better thing. There is a not man levels here. There is this high, this weekly kind of swing high coming into what is the edge of this volume profile basically. Jumping out to the daily, I have this level marked out on the daily as well, so there's that. There is this level of prior support on a weekly which we reclaimed, and there is the daily cluster. I don't know if you can see it because there is no clean daily distribution, so I will go with the whole area as a cluster. This large selling down day was quickly reversed. There is a argument for this to be even a QM trade, but I would like to see pullback into the cluster if that's ever going to happen. Besides that, there is a kind of a POC which is sticking out, so I want to be marking that. Where I would actually put that is here. Okay, you can see how it's quite off from the actual POC on the composite profile, but it is a level where we had prior resistance and also a little bit of support, although this is pretty messy, but this is actually the level I'm interested at, maybe even this daily open from this high impulse candle, but this is fine. Then I go to the H4 and mark out all the kind of clusters and stuff around that. There is a one which got tested already. This is this pullback before we finished this V-shape reversal. Came back to tested it and moved higher from there. So I'm not going to move the cluster higher because this is kind of the original one where the move happened, and there is also this double bottom in it, so I'm not going to mark this one, like this candle, although this is the start of the impulse, because basically there is the unfinished structure below that, so I want this to stay like this. And that's kind of it on a H4. So let me talk about the kind of a trade process, what I do on this swing time frame. I'm looking for H4 levels where you can have any kind of action during the day, which for kind of more new pieces of information, these would be your failed swing, where markets try to trade below the level and rejected it. You can see that on this H4 candle in the morning, market traded below this low, and the volume point of control for this candle is at this bottom right here. So this shows me some level of participation that is not really met with any follow through. So after that, I'm just going to go to the 30-minute time frame, and I can see that this was this yesterday low. Basically we broke below it, moved above it, we broke the structure here, and there is a level of the cluster there. To be fair, this is not a best kind of a bottoming structure you want to be looking at. Market can easily make one more swing for it, but I still ended up taking a trade basically into this kind of a cluster, and you can see so far nothing is really happening. I've been in a trade for 4 hours now, and we are hovering around this yesterday low. So this might not work out, but I felt like it's a trade worth taking, mostly because of the fact that this is the last week high, which on a futures market we didn't really trade it through it. On a spot forex, it got taken by like one tick, but there is this kind of a no excess, and then market started selling from the level, and once again you have this kind of a compression above these highs. So the structure for the upside is definitely there, but yeah, market is not really responding so far. I was expecting much stronger reaction after we reclaim this structure here, but this is it is what it is. Like I said, you will be having a losing trades. It's actually kind of a good thing to show you, because obviously throughout the video lessons you were seeing more of these perfect examples, but once you enter the trade, for example here, and you will just sit flat for 4 hours, you get some sort of a volume rejection here as well. You might start to get a little bit nervous about it, but it is what it is. You're just kind of going to stick to the trade and hope it's going to play out. I don't really have a reason to close it yet, so if I'm going to take a loss, I lost this 1 hour, which is fine. It's nothing too crazy about that. Once again, on a footprint, there was also a confluence on the footprint. As you can see, as we made this low, there was a large amount of selling, especially in these two candles. There was a real pickup in a delta, and this kind of a large seller, someone really, when it's huge like this, it's usually someone puking a long position. So we had this kind of a large selling at this price. Market reclaimed the level, so I got in at the retest, and market is not doing much at this point, but that's not actually important. The important thing is that showing you this kind of a top-down process, of the things that I'm looking at, the things that I'm thinking about during the day when I'm swing trading. And as you can see, I have this overview chart of all 6 markets that I'm actively trading. This is ES, Bitcoin, gold, crude oil, ETH, and Euro. So I am, just making the goal here is to make your daily preparation, which we will be talking about a little bit later, and then just monitor. I usually look at the markets around the H4 close of the candles. These different markets have different H4 closes, but your H4 chart is here really where you kind of go to. I am not trying to go against the H4 flow, as I said. If you take a look at Bitcoin on a H4 chart here, when we had this massive kind of a breakout on this day on a 30-minute chart, let me just quickly show you, because it's a good example of what I mean. You have this failed swing above this resistance. There was a buying pickup in the candle, I think, as well, so it makes kind of a perfect sense to just fade it and go with the continuation. But if you take a look at H4, we are at the level of support, and you have these constant H4 rejections. So this higher time frame, and like I said many times, the exact time frame is not so important, but these kind of a less granular candles, and you can very clearly see where the volume is distributed in those candles as well. You have these POCs really inside the wicks, so this is your sign that shorting this might not be the best idea, because you can see every time the point of control on these H4 bars were in the wick, market usually went the opposite direction. So this is what I mean by following the H4 flow. Okay, so this is the intraweek swing trading strategy, and now let's take a look at kind of a positional trading.